You're listening to AI PRISM from Seoul Economic Daily.
It's Tuesday, May 19. I'd like to share some thoughts about Markets Daily. Imagine opening a brand new toll booth right as a massive parade decides to take the highway. That is basically what's happening in the Korean financial markets right now. A historic KOSPI rally is generating just huge momentum, but the real question is whether the regulatory road can actually handle all this new traffic.
Yeah, exactly. And to see just how heavy that traffic is, you really have to look at the sheer trading volume hitting secondary exchanges right now.
Sure.
Take Nexttrade, for example.
Right, they're an ATS, an alternative trading system, right?
Right. They compete directly with the main Korea exchange. And their first quarter net profits just hit 34.9 billion won. That is roughly 25 million US dollars.
Wait, 25 million US dollars in a single quarter for a secondary exchange?
Yeah.
I mean, that beats their entire 2025 profit by over 70%. Are they offering some kind of, revolutionary new trading tech?
Well, not necessarily. It's purely a volume play here. The daily average trading value surged to 22.0 trillion won, or 15.7 billion US dollars.
Oh, wow. That is a lot of volume.
It is. Retail investors are just aggressively chasing large-cap semiconductor stocks, and Nexttrade is simply perfectly positioned to capture those transaction fees.
So the wealth isn't just in what people are buying. It's really about how the volume is moving. And right now, a massive chunk of that retail volume is pouring straight into ETFs.
Oh, absolutely. Total assets in the Korean ETF market just reached 478.4 trillion won.
Which is a staggering 341 billion US dollars.
Exactly. And because that market is so lucrative, asset managers are in an absolute dogfight to capture you and your capital. 8 major managers spent 11.1 billion won.
About 8 million US dollars.
Right, 8 million US dollars on advertising in the first quarter alone.
We're talking subway wrap ads and stadium sponsorships. It feels like they're selling sneakers or energy drinks, not financial instruments.
It really does.
But think about how an ETF actually works. If the underlying assets of a semiconductor ETF are mathematically identical across different managers, is marketing literally the only differentiator?
Well, that is sort of the quiet part out loud in the industry right now. When the market moves at warp speed, retail investors usually don't pause to dig into microscopic expense ratios.
Right. They just buy what they know.
Yeah, they buy the brand they recognize on the side of a bus.
Yeah.
Samsung Asset Management leverages its dominant Codex brand, while Mirae Asset Management aggressively pushes its Tiger brand to stay visible.
And that consumer-level brand loyalty translates to serious asset accumulation. Look at Mirae Asset Management. They doubled their total assets under management to 624 trillion won.
Which is 445 billion US dollars in just 2 years.
Yeah, in 2 years. Their Tiger Semiconductor Top P10 ETF alone is sitting at 10.3 trillion won, or 7.3 billion US dollars.
It's wild. But that retail-driven growth is spectacular, yet it brings us to a really critical vulnerability.
Okay, what is that?
Well, retail volume drives short-term profits, but sustaining a market of this size requires retaining global institutional investors, and global money requires structural transparency.
Right, which brings us to the regulatory speed bumps. Kwak Bang-jin, the chairman of the KASB, the Korea Accounting Standards Board, is really sounding the alarm about delaying ESG disclosure rules.
Yeah, environmental, social, and governance. The Financial Services Commission actually pushed back a 2028 roadmap for these disclosures.
Really? Why?
The delay happened because the National Pension Service, which is obviously a massive heavyweight in the Korean market, demanded stricter standards before moving forward.
I understand wanting to get the rules right, but doesn't hitting the pause button create massive friction?
It absolutely does.
If I'm a European asset manager, I have strict mandates at home. I can't just park billions in a market that says, we'll figure out the reporting later.
That is the exact risk. Without a legally binding framework for ESG, foreign capital becomes a huge liability for those overseas institutions.
Because they need that standardized data.
Exactly. European managers need that standardized data to comply with their own domestic regulations.
Yeah.
If Korea delays, that global institutional money could easily flow to markets with clearer rules.
Which would completely undercut this entire KOSPI rally. It's a very fragile balancing act. As single-stock leveraged ETFs prepare to launch next week, you have to wonder, will this retail-driven volume boom completely outrun the regulator's ability to lay down the necessary transparency standards? That's today's AI PRISM Markets Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a Juan Avifo award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.